Market structure on the weekly time frame is intact. We are bullish. But if you look at the fear and greed index, I mean, guys, look at this. 3-2. This is not good. Why? Because we have been talking about investors and traders coming back on board. But if we see that the market is becomes fearful, dropping down in this percentage, like now we are seeing 32, it means investors are wondering whether they should invest in Bitcoin, crypto, or maybe just go to gold or silver. And if you look at the liquidity heat map here, you will see clearly that we have key levels here, right up to $96,700, and below price we have right down to $88,000 for Bitcoin. So my question to us right now is, where are we going to focus our attention? Are we going to look at what the fear and greed index is showing us, or look at the liquidity zone, or maybe focus on market structure to see where we are on the macro scale with the market? You know what I'm going to go with? I'm going to go with market structure, because market structure is the key. Once you establish structure, then you are able to determine whether, when the market is fearful, it means you buying, or when you see key levels on the chart, it means you still buying, or maybe you stay away from the market. So we're going to talk about all of these in today's show. It's Tuesday. On Sunday, we saw how the market dropped down in value, and this today we saw how the market continued dropping down in value, right down to $90,000. These are all key areas I mentioned in my previous videos, my previous stream. This is a series, and this series is not gonna change. I want to maintain, like every Monday we talk about market structure, the structure for the week, what we anticipate for the week. Mondays, Tuesdays, Wednesdays, Thursdays, like every week, every day of the week will have its own series. Tomorrow is gonna be midweek reaction. So I just want us to chill and dive into all of this. But if you are new here for the first time, come on, smash that subscribe button. And if you're a returning subscriber, then you're welcome. Hit that like button nice and early. Let's dive into the juicy part of today's show. Now, if you're watching me on TikTok, I'm live on YouTube. You can watch my chat on YouTube. So just go on YouTube at the Betong Crypto. You're gonna find me there. Now let's get straight away into this. Guys, I love this liquidity zone because it gives me more clarity as to what I should expect price to do at certain key levels. For example, right now, Bitcoin get right has gotten right down to 90,800. Right, it came right down to 90,500. Yeah, right down to this area. But now, if you look here, you're gonna see that at 89,450, there's a huge chunk of liquidity there, right? And if you look down below price as well, see that we have a huge chunk of liquidity also at $88,000. But above price, you're gonna see that we have a huge chunk of liquidity at 94,300, and also at $94,450. These are all huge chunk of liquidity. Now, if we say price gravitate around liquidity, right? Not like if we say this is how price moves. Price moves around liquidity. Price goes to where liquidity is, because liquidity is what moves the market. When you see huge order below price, it means the market makers want to start marking price to the upside to give us that flavor, right? So what I'm seeing now below 90K, it means this might be the last dip that's going to take us to $94,450, as I mentioned, or they can take us straight away to 94,000 before bringing us back to 90,000 to 89,400. So it doesn't matter like what will happen after this. What matters is if you are able to position yourself before it happen, or like you're not caught out, or like you're not being exempted from the move. Like you are in the move before it happened, or you are able to get in on time. So what we're going to be discussing on this video, and we address most of this stuff based on previous price action. And guys, I'm not here to give you signals. I'm not here to hype you. I'm here for education only. I'm here to help you read the market. I want you to learn how to read the market before you react to the market instead of reacting before you read the market. So let's get straight away to the chart of the big boss BTC. Now, we have already established that we are bullish on the weekly setup. Let's drop down to the daily setup. Where are we now on this setup? Okay, where are we? We are at a key order block zone. Guys, look, this order block here, this zone, initiated this huge move to the upside on a daily time frame until we created the next high based on market structure. You can see we break this high here, and there was a full candle that closed above this high, and this was a candle that wasn't able to take us to create more highs, right? But now, guys, we are still in structure on the daily time frame based on this short-term move. But we have to as well look at the previous move, right? To see, okay, if price is going to reject from there, where should we be looking at to be our main area? So that if price break that area, that's when we become concerned. So today, what I want you to do is just go to the 4 hours time frame and look at this zone that price has been rejecting. Let me just give you a taste, like a logic here. Logic. Based on previous price action, if price is rejecting or if price has rejected a particular zone multiple times in the past, then there's high chances that price is going to reject that from that same zone again in the future. So what you're doing is you're building your momentum around that area. So you're going to start looking at your entry around that area where price has been rejecting multiple times in the past. So looking at structure right now around the 90,000 or 91,000 price point, you can see that in the past price rejected that zone multiple times. So you can just bring in the volume profile. Yeah, it's simple. Like on this 4 hour time frame, I want to also mark only this zone here on the 4 hours time frame before breakout, and I want us to focus more on the POC here and not the value area low or the value area high, the POC, and we take it to the future. You're going to see that the POC is in confluence with this line that I drew in the middle in the past. You can see in confluence, and you can see exactly that price rejected from this zone. How many times? Twice now on the 4 hours time frame. Guys, this is not coincidence. This is TA. This is you reading the market. Okay? People say trading is like a gamble, is gambling. No, it's a skill. You have to understand. And whatever comes after this is gonna be based on what you have been doing before that is gonna happen. Now, I want to take you us back again before we break this level. Let's go back behind a little bit and see how price reacted around this level. Yeah, the same level. If I go to the past, guys, what are you seeing here? Look at this, guys. Look at this key area. Let me just mark this for you. I'm gonna change this color to something else so you see that this is not magic. This is technical analysis. So let's go behind and see what price did back then. Look, guys, price is rejecting now at a key level. Okay, look at this. Look at this, guys. I mean, this is not coincidence. Where price is at a key level. I'm gonna change the color of this. Let me see. Can I change this color right now? Maybe this. Yeah. So now what price is doing is price is reacting to this key level. So we have now established that on the 4 hours time frame, the daily time frame, and the weekly time frame, we are bullish with Bitcoin. So looking at this now, you drop down to the 1 hour time frame. But if you look at this level on the 4 hours time frame, you're gonna see that there is some sort of like an other block forming here on the 4 hours time frame. And this other block is in confluence to this previous dip here that price rejected this zone. Now, going down to the 1 hour time frame, what do you see here, guys? I want us to do this real time. So, what you see here is simple. If we are going to be able to make the next move, at least, guys, price needs to do something that price always do. Price need to go and attempt to break this low, this high here. And if we break this high, then structure on this time frame is broken. Like, structure within structure is broken. Now, this could also mean divergence on the 1 hour time frame, right? This could mean divergence here. If you look at this, it could mean divergence, right? And if this is divergence, then it means what we want to see happen here, this low here, based on the other block, this low here, we don't want to see price take out this low. So what we want to see is simple. Even if price takes out the low, price should, if should stay within this range. Within this range. We don't want to see price go below that range. So if price is gonna go below that range, then that's when we can become concerned with the price of Bitcoin. Because if it's gonna happen, it means we might just go straight away to that $88,000. And based on what I mentioned in my previous videos, if we look at the 4 hours time frame and seeing that losing this zone could mean devastating for the entire crypto market. So if we're gonna look at Bitcoin dropping down to $88,000 based on what we have seen here on this liquidity heat map, it's not going to be good for the entire crypto market, right? Ethereum, Solana is going to plunge to the downside. We have seen what has happened previously. We saw how Bitcoin dip, and most of these altcoins dip or follows Bitcoin, like dip with Bitcoin. And what makes you think if Bitcoin is not dip to 88, Solana, Ethereum are not going to follow the same suit? That's why I focus most of my attention looking at Bitcoin. Bitcoin is the alpha, is the macro boss. If you're able to deduce what will happen with Bitcoin, then you'll be able to anticipate what might happen with your altcoins. So, looking at what I'm seeing now on the chart, my thesis is we should at least stay above 90K if we want to make it to the next level above us or above price. But if we go below 90K and go right down to 88K and there's no real volume to buy back, oh boy, we are gonna go down. Maybe we can go down straight to even $74,000 for Bitcoin. It's possible. That's why you have to understand the risk appetite in the market. Look at key levels. Which levels is respecting itself based on previous price action? Once you are able to read all of this, then now you can go to your chart and start looking at other block, fair value gap, volume. Doing session open. Like, for example, let's just go now straight away to the 15 minutes time frame. Let me give you guys a clear scenario where we should expect some sort of movement in the market, and then, or like, where we can confirm that, okay, now price is gonna go to this direction. So this is Bitcoin now on the 15 minutes time frame. So what I want you to focus on is where price left and where price is today. Now, price left the start of the week of the week, right? It was like that was yesterday. Price moved sideways throughout the Asia, London, and US session. Then during this dead gap zone and the beginning of the Asian session today, we saw how the market dropped down right towards where the UK session. And now we are in the UK session. UK hasn't taken out the high of Asia, and UK hasn't taken out the low of Asia either. So UK is just moving sideways as what UK did yesterday. And what will US do? So we're gonna wait to see how US will react. So based on this, let's just bring in the volume profile and focus on this movement here, like this movement that price, like, yeah, this whole zone that price is consolidating sideways. So I'm gonna bring in the volume profile, take it from this zone to where price is right now. And if price break above the value area high, then we are bullish. If it breaks below the value area low, then we are bearish. This is how you determine how price is gonna move today. Okay, we have to follow market structure. You trade during sessions, and the US session is the session that I trade. Why? Because that's the area where liquidity is found. Liquidity is found mostly during like you can argue that UK, yeah, but usually US has the most of the money to move the market. Okay, so now, how will we establish that we are bullish, right, with Bitcoin, and until we see key levels being taken out, right? Let's drop down now to see what the Ethereum, structure is telling us. Like, guys, okay, look, I mean, just looking at this on the 15 minutes time frame, it's the same thing. The same thing is happening with Ethereum. Ethereum is moving alongside Bitcoin. Before doing this live video, I've done a short video on how to identify market structure, support, and resistance for Ethereum, but I've done a video for Bitcoin. Guys, if you watch that video, trust me, the way you look at the market will be different. I'm tired. I'm done seeing people losing money most of the time because they are just want to FOMO in, or because they got bad education from people who don't understand nothing. The crypto market is going nowhere. If you are an investor, you are a trader, you have to be patient. You have to be patient because this is your hard earned money, it's money you work for, and you need to preserve that money. You need a proper risk management to protect your money. Don't just buy with impulsively because you see the market going up. So, what I'm teaching you guys here is pure education. I want you to be able to be to be able to look at any market, be it gold, silver, Bitcoin, stocks, forex, name it, and you trade it like a pro, looking at market structure. So Ethereum now, looking at this, guys. I mean, and let me just go to a different Ethereum chart. But I've done analysis on this one. I think let me see. But this one, I think I've done analysis here on the okay, yeah, the same thing. So I'm gonna stick with this chart because this is the chart we have been working on, in the past. So we are still in structure with Ethereum as well, based on the weekly setup. you know, the bias for the week is bullish. Okay. And looking at the bias for the daily time frame, it's the same thing. It's bullish until we take out key levels before we can start saying that Ethereum is bearish. We are just recovering this vector candle and price is still at a key level, yeah. And there is an order block. Remember, I told you guys about this order block here and fair value gap around this area that we can easily dip to this zone. And this is the other block here, this area here, and this fair value gap that caused us to go and make this high here. But if you look at Ethereum in general and look at how price has been moving with Ethereum, I would say that Ethereum has been moving sideways more on the daily and the weekly setup. Okay, we haven't really seen like any major break of structure on the daily and on the weekly setup. So I would say that Ethereum is just moving sideways, consolidating sideways. Price is not actually doing anything. So as an investor, you are not like w- concerned about the daily price action for Ethereum. What you're concerned more about is the weekly setup. Are we bullish or is price sitting at a key level on the weekly setup for Ethereum? Now, having said that, let me bring in the chart that I did analysis on. I think that was today. This is the chart. Let me see. Yeah, this is the chart that I did analysis on today. So looking at this chart, I mark lower highs, lower lows, lower highs, like this high, this low. And I also mark key levels here. You can see this level here. These are key levels. So if we see Ethereum break and close below, let's say like Ethereum can go right down to $2,000. It's possible. Why? Because the move that took us to 4,000, almost $5,000 for Ethereum began or started around $1,384. That's why I'm looking at Ethereum like, okay, even if Ethereum coming right down towards that area, it's gonna be still a good buy. We're gonna still be in structure on the weekly setup, and the same on the daily setup, right? But now, what I'm seeing here with Ethereum is different because Ethereum is actually holding previous support zone. So where it is at right now is at a previous structure levels or support level, which means there's liquidity below price. And if say they are to move to the upside to an extent, I should expect them to attack some of this liquidity below price before making the use move to the upside. That's why I think we can see Ethereum drop down a little bit to grab some liquidity around the 2,500 price point, right? Before going to the upside, or maybe stay around this structure, yeah, all right, and come right down to let's say 2,900 before continue to the upside. But if you look at the liquidity heat map for Ethereum, let's just see where we are with the liquidity heat map for Ethereum, which levels we are and which level we are respecting. So based on that, you know, I would say that based on the liquidity heat map for Ethereum, we have liquidity right down to $3,000 for and this is good because guys, where we are and where we might be anticipating price to go to, it's not that significant. We are at, let's say, $3,100, and we are expecting price to go to at least $3,000. $3,000 meaning price should stay above $3,000 if say we want to see continuation to the upside. And look at this chunk of liquidity around 3,200 for Ethereum. Wow, that's huge. So if you're building your plan or strategy this week, and you should put in mind that, or bear in mind that Ethereum at 3,000 is at a key levels where you can easily get price. Like I usually say, sweet spot. The sweet spot of Ethereum should be at $3,000. So if you're buying at $3,000, then you are going to be buying at a sweet spot. And if you're taking out profit around $3,200, then you're going to be cashing out profit at a sweet spot, because these are the key areas where we have most of the liquidity. Now we can see that at right up to $3,244 are the most, like, the key liquidity zones. We can go to the chart right now of Ethereum and then mark those key areas. That's $3,200 dollars price point. So going there, this is gonna be around this 3,000 2,000. So it's gonna be around this level here, around this area. Yeah, around this area. So this should be the area, if say you want to trade today, that you pay attention to how price is gonna react with Ethereum, right? Then if you look at the future, okay, I'm sorry, I look at below price, $3,000, which is here. We should just let me just say this low. We don't want to see Ethereum take out this low here. So this is gonna be the major levels where we don't want to see Ethereum take out. This support level here. On, like, today, if Ethereum break this level today, then you know it's not gonna be good. All right. But what I'm thinking might happen is gonna be this. If we see a huge week like this, then buyback price close above here, then this is gonna mean liquidity sweep below price. So Ethereum in general is bullish, but we need to see how price is gonna form on the daily time frame today, and also the lower time frame, like the 1 hour, the 15 minutes, and also the 5 minutes time frame. We see if you want to take some trades today. Now, dropping down to the 15 minutes time frame, we're not like, just see that this is our range for today. Like, see, this is the range for today. If you're gonna buy Ethereum today, then this is where you cash out your profit. Okay, but for those who are investing or you want to swing trade, be patient. Don't rush. Wait on the 4 hours time frame. Wait to see how price is gonna react here multiple times. If price react here multiple, like you see price reject or respect this structure, yeah, you know, then that's when you're gonna be okay. It means they wanna respect, they wanna maintain this level, or this support zone. From there, you can now start looking to buy and target this high here, this previous high, this zone here. You know, So if you are buying here based on the 4 hours time frame setup, you are targeting this high here. You know, that should be how you're gonna like analyze or react to what price is doing currently. You know, and if we shift now to Solana, okay, guys, the same thing. Like the same thing is happening with Solana. Like guys, that's why I love this asset. Solana, Bitcoin, Ethereum. They have the most liquidity. And if you are able to deduce to go deep Bitcoin, then you confirm with Ethereum, you can just buy or trade Solana without you even looking at the chart. Trust me. Maybe you're gonna look at the chart to look at areas where you can, place your stop loss or look at key levels for Solana, but it doesn't mean that you're gonna be actually doing analysis like deep dive. No, all the deep dive is with Bitcoin. That's why I spend so much time with Bitcoin, little time with Ethereum, less time with Solana, right? So Solana, I want to just look at the weekly bias, which is let's see. Yeah, I mean it's on the weekly time frame. Solana has been moving sideways ever since that was since 2024, since like 2 years ago on the weekly setup. This bad boy has been not, let me see. That was back then, let's say, after this high year. That was 2024. Yeah, 2024. Solana has been moving sideways. Sideways. So if we are to be worried with Solana, it's only when we see the price of Solana stays above below um let's say $93. Yeah, below that price point, we can go right down to even lower prices like $51 for Solana. Okay, but for now we have to respect where structure is respecting, and this is based on previous structure here. You can see this whole zone here. Last time, multiple times rejecting here, the same thing happening here. So if we are to break and close above this level here, that's when we are going to start looking for more higher opportunities for Solana. But for now, as an investor, this is a buy zone and also a caution zone. Because if you look at price action on this time frame, I mean, it's showing that price might even drop like more to the downside than to the upside. You can see from here this move, and we can come back here at around $20. Yeah, it's possible. Anything is possible in cryptocurrency. Don't never you say never. You know. So I once said all of this with Ethereum or with Solana. I want us to look at now what has been going on based on the structure weekly and daily. So looking at this now, you can see price just moving, or like let me say ranging sideways. We are now at the value area low. Doesn't mean that we're gonna like reverse from here and go back to the value area high. So until we break either of these key levels, yeah, you know, before we can say okay, or like before we can confirm the direction that we are going to take. But if say Bitcoin breaks structure first, then Ethereum will break structure second. Same with Solana as Solana third. So you have to understand how this align with each other. Now, looking at this on the 15 minutes time frame, okay, now there could be a trade here like now. So there is an order block here and a fair value gap somehow, even though it didn't take us to create a high. But let me just treat this as an area of interest after this huge move with volume, because there was a huge volume here. So if you want to buy Solana, like trade Solana, this is the best entry now. Now, of course, it's not trade signal. I'm not here to give you trade signal. I'm here to just tell you, okay, like to minimize your risk, your stop loss is gonna be just directly below the other block, which is gonna be around $128 for your stop loss. Okay, then your take profit will target the high of last week. sorry, the high of, I think the high of yes, the low of yesterday. Yeah, the low of yesterday should take us to around one 133 or $134. Yeah, around the $133. So if you're buying right now, then make sure if you see Solana at $133, you're selling Solana. You know, that's the trade for today. If say it happens, or if say gonna right. But if not, if we break and close below this level, then we're not going downward. You can as well bring in the volume profile. Yeah, you do the same what I did with Ethereum. You mark it there, and if we break above that, we have broken above, then we should be going more to the upside. If we break below, then we should go more to the downside. So let's get now to the macro aspect of the market, which is gold and silver. Those of you who are watching on TikTok, I'm live. I'm doing my normal live. I do live every day on YouTube, analyzing the market. I talk about Bitcoin, Ethereum, Solana, gold, and silver. So if you're interested, you can hop to my YouTube, and I'm gonna be streaming soon on TikTok. Where I'm still building that. Until then, you can check me on YouTube to get what I'm doing here. Now let's get to gold real quick, and look at this baby on the weekly setup. Okay. Now, as I mentioned to you guys earlier, with gold is doing well because of macroeconomic doings, wars, the Venezuela stuff, Ukraine stuff, um um Iran, Greenland, Trump tariff on EU and other stuff, like a lot of macroeconomic interest rate, high inflation, all those stuff. Like it caused gold to increase in values, and when gold increases in value, it means investors are going to going to risk of asset, the asset that they consider less risky. So if you see gold price going up, it means investors think that other other assets are not going to be sustainable during that period of time. Even US dollars, they are getting out from the US dollars to buy gold and silver, because that's the asset that they think is going to preserve their capital or preserve their money. So on the weekly setup, you can see it's in an uptrend, right? It's bullish, higher highs, higher lows. Now, on the daily time frame, look at this CME gap here. Look at this jump. Yeah. Right? Now, this CME gap has to be recovered at one point. This means imbalance on the chart, this zone here. Right. So this if the price of gold continue to go to the upside, you have your zone to actually start looking for let me say buy, because this zone has to be recovered before we see any major movement to the upside. Or if you see weakness on the daily time frame, sorry, if you see weakness on lower time frame for a day, then you can look at this area as a target. They're gonna fill this CME gap. So if we go now to the 4 hours time frame, you can see that you know price is moving in, like, I think, like, price is moving in our, you don't use the word predictable manner. Okay, you see on the 4 hours time frame, you can see sideways up, sideways up, sideways up. So does it mean that from here we're gonna move sideways up again? I don't think so, because of this CME gap, this huge gap here that we have marked on the daily time frame. So if we see weakness here, like the first weakness is this one, if this candle fail to break and close above, then the next candle might take us a little bit downward and break the low of the previous candle until we get back to this zone. Yeah. And it will make sense. Why? Because if you look at this on the 4 hours time frame, there is a fair value gap here and another block, right? So it's but normal for them to retrace back to this area. And if they retrace back to this area, it means they're gonna break this low, and this can set gold into a major retracement, and investors might start, finding other asset to invest in. You know, and you can see the same thing with silver. I said earlier that from what I'm seeing, it's like they want to take silver to $100 per ounce, right? So if they succeed to take us to $100, which is like kind of like the psychological level, right? It's gonna be easier for them to take us back, retrace back to about 54, you know, dollars per ounce for silver. But if we zoom out, you can, and if say like on a super bearish scenario, they can easily take us. Yeah, okay, no, no, no. They can. This is like, yeah, this is a level, yeah. So if say we're gonna lose these levels, yeah, on the weekly setup, then they can easily take us to 55, or right down to the $46 price point per ounce of silver. So going to now the daily time frame, let's see. Okay, there's also a CMA gap, yes, something, well, even though it's not really, but you can see clearly, yeah, you know, and this signifies like low momentum. You can see clearly volume is dropping down here on this, like this two candle low volume, so it might mean the trend is fading. So they can easily target the $100 price point before retracing back to these key levels here that I mark on the chart. You can see if we're gonna reject up there, the next zone is gonna be this one. Then from there we're gonna go straight to $70, and from $70 we can go straight to these levels here. But for now, let's focus on these key levels here. This one and where price is. Sorry, this one at 70, and where price is currently at around 95 or 95. Yeah, 95. So based on this, guys, I think silver is bullish, but until then, we have to just keep watching. We can look for entries on the 4 hours time frame if say we see any. But for now, guys, I'm not gonna do anything until I see break of structure, like on the higher time frame, like the 4 hours daily and weekly time frame for silver. But for now, guys, silver is super bullish. There's a CME gap here for gold, yeah, and for gold, yeah. Sorry, for silver, you can see here on the 4 hours time frame, there's this CME gap, yeah, you know. So all of these zones are important area where they can easily drive price there, and also another block, yeah, and a fair value gap. So there's a lot of liquidity here that I think they can come and grab easily before anything else. So that's that for the whole series today. Hopefully you enjoy the video, you enjoy the show. I've spilled out a lot of stuff. Tomorrow is midweek reversal. We're gonna see whether tomorrow we're gonna experience that massive retracement back to key levels above price, or we're gonna continue to dip to the downside. Until then, guys, don't forget subscribe if you haven't yet subscribed. Watch my previous videos to gain more clarity about what I've been talking here in the past, and give you more clarity in the future. And subscribe, like, and share. Bye bye, guys. Ciao.